Good day. Ira Epstein with your agriculture wrap-up, and this is for Thursday. And now we're sitting here at the, what are we now, the 13th? Yeah, tomorrow's Valentine's Day. Today's the 13th of February, 2020, about 1:50 p.m. Central Time. Well, as you can see in the grain market's a very mixed bag, and I'm expecting that. Why? Traders are a little concerned about going into the long weekend, what's going to happen with the COVID-19, which used to be called coronavirus, if you'll recall. So they're concerned about the impact. Are we going to get bad news, good news, which way? And you're getting these markets responding in strange ways. Example, copper market up today along with the gold. Some traders are starting to think that the inflation scenario might come back because you're losing certain supplies that come out of China, and those items might have to go up in prices. You know, price demand starts looking at things. I was reading an interesting story on that today. On the energy market, you've hit your upside targets as I see it in the near term on the gasoline and the nat gas. And it's interesting that nat gas is slipping back today because here we are with freezing weather. A cold blast is going to come through the from Chicago right onto the East Coast. Now you'll see it in tonight's news. But the market's not responding to that. And the market's not responding because you're not getting these big draws in the BCFs that are taken out of the storage. So let's take a look at what's going on. We're up 14 cents for the week in soybeans. Certainly the market found, and I think we could argue that against this 880 level, the market did find its footing. Now the question is, what does it do on rallies? I see resistance around the 910, 911 area. When we look at a daily bar chart, you can see how the market slipped away and then started this pattern of higher lows, higher highs. Now, you see this easier when you put a swing line on the chart, and you get to see it right like this. Higher lows, higher highs. The swing line, by the way, if you haven't learned about it, it's in my charting course on the website. It's a line that you draw today to yesterday depending on a series of 5 variables. I built a formula to automatically do it in the charting software, so it does it for you. So we're in an uptrend until the market, and unless the market takes out 878, that would break the pattern of higher lows, higher highs. The resistance, yesterday you saw the 18-day average act as the resistance. You opened steady and you were able to extend a little bit from it. So where is other resistance in the market? Well, I see the 100-day average up here at 926, and I see this Bollinger Band, the black dashed line, crashing in. I was explaining that yesterday. It's going to come marching down and then skid. That's probably how it's going to work. It'll start a skid pattern, just the way you were coming down here, and then it was starting to skid that way. Well, this one will probably come towards the price and do a little bit of right-hand skidding. That's very typical of what the pattern will be. But that's wherever that is your resistance. The market is dropping on that number. If we look each day here, approximately 6 to 7 cents a day right now. So assuming, because you didn't have a big close away from yesterday, only up 3 3/4 cents. I'm going to guess it's going to come in around the 910 area tomorrow. We'll see what it does, but that would not be a surprise to me. So we're getting up into a resistance zone. Momentum. Well, let's talk about this for a moment. This is called an embedded reading. I keep explaining what these are to you because they're important. It's when momentum is locked in. It means that the two numbers that make up the slow stochastic start going sideways under 80, and they do it for several days or more, which you did. Often, momentum leads price. It's not price leading momentum. And when you lose the embedded reading, depending how far away you are from one of these averages, that is my goal. Now, the only time it can re-embed when it's lost is the very next day. If it doesn't do so, I contend that the contra-trend traders, the people that are under the bias of the market, are going to look for price in the 18-day average to make a run at each other. There's a way you can play this with stops too. Well, yesterday you went right to that number, hit the objective. Today you exceeded it. That's okay. Now you also have a market that's no longer what? Markets that embed to the bear side first become typically oversold. So they leave the embedded stage, they become oversold. You need to get both numbers over 30 for them not to be oversold, and you've accomplished that now. So I have a market that's got a bullish bias. The bias will change. In fact, the trend would change if you took out 878. If it runs up, I'm going to guess a 910 area of resistance. In the meal market, you also lost the embedded reading back here. See it? Let's come to it. Right here you lose it. But you got so close, I think that was the day it actually hit it. Today was just for good measure. Were you able to close over the 18-day average? No. So I'm not seeing just yet that the crushers are reaching for anything in a big way. Close over the 18-day average, that could get interesting. And the oil's the laggard right now. For a long time, oil was the leader on these markets to the upside. It's not been the case. In fact, they were crushing in China soybeans before the coronavirus for the oil. That was the commodity that they wanted. And we thought in America, when they were going to do the U.S.-Chinese trade deal, that we would be getting a lot of business in beans for that oil. Right now, any supply is too much supply in China. They got to work through stores of goods that they have. Then the demand cycle kicks in. That's how it'll work. But you have lower highs, you got higher lows. I don't see a trend just here. Let's assume the market pops over 31.25 for the sake of discussion. Next resistance, 31.80. Let's assume it gets under 30.40 and stays weak. Next objective, 29.64. In the corn market, if you can't see the battleground, I don't know what else to tell you. It's the 18-day average of closes. You keep going up there, and you're fighting it. You've got the trend up because you've had a pattern of higher lows and higher highs. It's failing against the 18-day average, and the market is staying in a condition here where it's not oversold. It's just sort of leaning here on that momentum. Any numbers over 30, and both numbers in the slow stochastic are over 30, you're not oversold. In the wheat market, as I said yesterday, you're getting into this area of the 100-day average to the which is the green line to the lower Bollinger Band. I'm looking for that to be something of a support zone now. Generally, the first challenge of that you got to keep your eye on. It could still fall back to it. Are we trending? No. You've got a higher high, lower low. Do we have downside bias? Absolutely. Are we oversold and not embedded? Yes, that's exactly what you've got there. When I take a look at the sugar market today had a big break. We have been talking together here as this market's been coming up, and I've done my best to tell you, be careful. This market, number one, at the end of the month, kicks into typically a very bearish seasonal. Number two, you had 1 day over the Bollinger Band, 2 days over the band, 3 days in a row over the band, and lo and behold, you have right here, well, I'm going to say 3 days, 1492 is not over. So you had 3 days over the band, which gives the market coming into today 2% probability that it'll stay over the band. Each consecutive day over a band takes away, in the theory of the algorithm, 5% of the time it settles above or below. I came up with a rule of thumb on that. And that rule of thumb is I think you can do better. It's got a 2% chance of staying above the band. And you can see that that's what's happened. Something else bad happened today. This momentum's turned down on you. So you got momentum down, trend up, backing off from the upper Bollinger Band. You haven't broken the trend, but I don't think most traders buy overbought or try to buy overbought or try to sell oversold. They could, but it's not what I've seen in my career of charting. Now, here's a market that we had an edge on. I kept telling you, I think this market's going to get back to that 18-day average. But more important, what I was saying to you as we were breaking, I said, when I see a market come from 145 down to roughly the 98 level, it's lost 45 cents. What are you looking for on the downside? That's the problem. So I'm looking to see when the embedded reading gets lost, and then when that happens, I think you could have a chance at pricing the 18-day average making a run at each other. You just missed losing it last night. You lost it today. So now what's the market? Well, it's in the corrective mode. You closed at 104.45, so you now have a pattern of higher lows, higher highs, and outside day up with a settlement over the 18-day average. If the shorts get motivated to come out, next resistance all the way up here. Maybe a churn in this area, but I like that coffee did this because copper's up today, coffee's up. It's telling me China's getting back to work. Now, I can't tell you the exact provinces, but I can tell you it's a better sign than a weak sign in the market. There's a lot of coffee shops, remember? Thousands. I think Starbucks alone has 4,000 there or something. So as they start coming back, people get to work, they stop for coffees. That's something I keep my eye on here. In the cocoa market, battlegrounds, the upper Bollinger Band. And today you got back up to it. Now, the last high was $29.94. You then got under the band. You're just overbought, not embedded. Back up to it, you're still overbought. No change. Yes, it's an uptrend. I don't argue that. It's been one since back here with the higher lows and this higher high. It's gotten up to that upper band until you take out the 26, what is that, 28.79. Still looks bullish to me, but you're at targets that you're going to have trouble with, or should have trouble with, maybe is the right word. Watch cattle tomorrow. I think it's going to be important. I think when it reopens, it's going to lose its embedded reading. Feeder cattle did, and you can see lower highs, lower lows. Last, the hog market. Yeah, you're missing the feeder cattle, because I'll cover that in my morning subscriber videos going forward. This particular video set has just been too long, so I'm trying to shorten it a little bit. It's all covered in my 40 charts in the morning. You had lower highs to this one. Now you got higher lows, and if you lose the embedded reading, which you've done, I am looking for this pullback to result in price and the 18-day average going together. I'm wrong in my thinking, clearly, if this market gets under these lows. But barring that, I'd be surprised if we don't get a bit of a pop in the market. And I'm not telling you buy it or not buy it. I'm saying I think the shorts are out of it. Now the question is, can you pop up to that number? You know, as I just said to you, I'm doing something with my research. And what I've done is I keep doing more of it. And I've put the meat of my products into what I write during the day. Twice daily I write updates. At least one oral update a day, sometimes two, most of the time two. Then I start you off in the morning, if you're a subscriber of mine, to my full research package. You get the morning subscriber video where I cover 40 charts. I put mine out today, started recording at 5:30 in the morning because it was an important day. This is what my newsletters look like. They're not meant to be volumes. They're going to give you what's going on during the day, what to look for. Example, at night for the next morning, at 11:30 in the morning, what's going on during the day. For those of you that like window envelopes, and I really use those, the daily numbers for them are there. The audio commentary for them is there too. That's where you get it. My full research has the full package that I want. Some people want a stripped down package, just the commentary. You can do that too. But I think you'll like the way I write. It's simple, it's to the point, gives you the highlights of the market, and then I tie it together with the charting. If you'd like to learn more about it, go to our website. You can get a free trial to it if you haven't had one. Otherwise, go up to Market Research. It explains how everything works. And of course, my staff is there to help you. But you'll see the word research on the website. You can always click here to get there as well. I'm Ira Epstein. Have a good day.